way we make this concrete at the time, and again, this is when we were just getting started, we basically developed a dynamic super app. This was kind of in the spirit of what WeChat has done, but in sports, right? So we had games, we had, again, a super app that included games, trivia. It included passive consumption of information, interactive Web 2 features. So what we did is we benchmarked all the top social media platforms, got their most used features, incorporated it into an app that was the official app for the Colombian national team, and then basically promoted the hell out of it in partnership, obviously, with the league in the Russia World Cup, right? So that's where we onboarded millions of users, got a bunch of sponsors, and it was very, very interesting. We got in an obscene amount of traffic, more than we were forecasting, and it was a phenomenal learning experience.
Here's the one.
I have a dream.
With great power comes great responsibility.
I could do this all day.
This is it. Don't get scared now.
They may take our lives, but they'll never take our freedom.
Cinderella story out of nowhere.
It's in the hole. That the only thing we have to fear is fear itself.
Capital hacking begins in 3, 2, 1.
Welcome back to Capital Hacking. John, great to have you here.
What a show we have today, guys. Alejandro Laplana talks about how he started businesses young, how he was able to scale his businesses, how he now has over 500 employees. Man, this guy is on fire.
So really cool departure from the norm. We have somebody here who crisscrosses several different industries. He's primarily a technologist. He's a venture capitalist. He's a real estate investor. And ring, 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 ring. He's also getting involved in tokenization of real estate. If that's actually something that has shown up on the show before. I think we're going to love that.
He has a company. He's the CEO of Shokworks. And I also love how they co-invest with other entrepreneurs and their businesses. They come alongside. He's created over 400 apps. They're working with companies like FC Barcelona, Real Madrid, the Raiders, the Tampa Bay Bucks, and the list goes on.
It does. You're going to love this episode. Lots of interesting things. Very, very good. You're going to learn about new technologies as well. We don't always do that here, but we need to be abreast of technology as well as capital. So you're going to love this episode. Enjoy. It is an absolute pleasure to have you here, Alejandro. Welcome to the big show.
Thank you so much. Thank you guys for having me. Very excited.
Yeah, John and I wanted to dig in. I mean, we don't always get to have technology, entrepreneurs, investors, venture capitalists on the show. So we get excited. A quick story before we ask you a little bit about your background. You and I are connected through the incredible organization, the Family Office Club with Richard C. Wilson. I'm a real big fan of that gentleman. I don't know. It seems like you speak at a lot of his events, right?
Yeah. Big fan of Richard and, the Single Family Office Club, all his initiatives. It's a very dynamic organization, and they do deliver quite a bit of value for very, very nominal fees, and, their experiences and events are great.
Yep. And you know what? He actually has become a good friend and investor with us. And he's our keynote. In case anyone's listening, he's our keynote December 3rd at our big Learn and Grow Summit. But before we get into all the fun stuff, Alejandro, could you share with the audience, the thousands and thousands of us, a little more about yourself and your background? Do you have a family? What kind of work do you like to do?
Yeah, for sure. So I'll keep the monologue purposefully short, right? I'll spare you guys of the whole, to get to the fun stuff. Basically, I'm a Venezuelan and Spanish national, migrated to the US when I was about 15. Did spend some time in Miami, New York, started companies early on, right? So started with a patent fund, had my first experiences in outsized success and then failures as well. But with that, I kind of I arrived at the conclusion that in order to build companies from scratch, right? At least in technology at the growth stage, it makes all capital contributions are distilled into product. So instead of really approaching it through IP and capital, I approached it through product. That basically allowed us to generate profitable growth. With that, we pivoted into a VC model, even though we don't have external investors. So it's really just us and our cash flows investing and doubling down into all kinds of companies. Now we've really focused in Series A and Series B companies at a growth threshold that we can be difference makers in, primarily fintech, Web3, but really anything that's interesting and adds value, right? So, we are activist investors. We get involved in the management of companies. I'm in more boards than I care to admit to, right? So we do kind of own what we invest in. And yeah, we've had very good success to date. We went from having 7 employees on staff 5 years ago to having well over 500 full-time employees, 40 portfolio companies. I could say 10 of those are very successful. The other 10 could go either way, and 20, like everything, you live and you learn. But yeah, that's Shokworks in a nutshell.
Sounds amazing. Alejandro, so I'm seeing you have you've developed 400 digital platforms, applications. You're working with the Colombian National Soccer Association. What is this? FC Barcelona, Real Madrid. Do you have a soccer background? How did you make these connections?
I don't. So I actually, when I was starting up Shokworks, partnered with some very dynamic gentlemen who had a company called Two-Way Sports. And that was our first investment and our first company where we really became the technology backbone. And through them, we really took the sports and entertainment world by storm. We started off in Latin America with Colombia, Ecuador, Mexico. Then that, led us to the World Cup, where we had 2 national teams under our, and again, I had very limited experience at the time, but we had millions of users, any and every corporate sponsor you can imagine. Then that shifted to hosting private events for Fox Sports, ESPN, and building digital products there in very innovative ways. And finally, Europe with teams like you mentioned, PSG, Real Madrid, Barcelona. That being said, we pivoted more into second screen gaming, and that's where you could see some of the NFL experience. But now we've really shifted from media and sports really to fintech growth companies, Web3, mixed reality. So it was fun while it lasted, and we still dabble, but we've shifted our focus.
For the listeners, you've used a few vocabulary words. For someone like you, you probably speak many more than 2 languages. Of course, you speak at least 2. But can you share a little more of this these terms you're throwing out? VC, platforms, the different apps you use, the millions of users. Why don't we start with an example? So back in the World Cup, what would have been a resource you were providing to the World Cup that makes it a little more tangible for us listeners?
Yeah, absolutely. So that's a great question, and apologies if I jargonize. I try not to do that at all. So
no, what? We just love learning.
Yeah. But at any rate, so to your point, which is a very good question, the way we make this concrete at the time, and again, this is when we were just getting started, we basically developed a dynamic super app. This was kind of in the spirit of what WeChat has done, but in sports, right? So we had games. We had, again, a super app that included games, trivia. It included passive consumption of information, interactive Web2 features. So what we did is we benchmarked all the top social media platforms, got their most used features, incorporated it into an app that was the official app for the Colombian national team, and then basically promoted the hell out of it in partnership, obviously, with the league in the Russia World Cup, right? So that's where we onboarded millions of users, got a bunch of sponsors, and it was very, very interesting. We got an obscene amount of traffic, more than we were forecasting, and it was a phenomenal learning experience.
I'm sorry, can I dig in a little more, John? Because what you just described there, so curious. I get it. A super app that learned from the different social media, so games, content, and it was promoted by the teams. So if I'm a fan of the team, so I'm just going to download this app. It was probably a free model, right? Free download.
It was an ad tech model. It was obviously free
ads
in that we don't charge the users. I mean, we did do loyalty programs with other teams and other organizations where you had tiered versions of the product. However, in this specific case, it was a free download, but it was again an ad tech model. So it was really based on the traffic and what we could sell. That we'd have beer companies, all kinds of companies, just kind of.
So my next silly question has to do with, you said an obscene amount of traffic. I imagine that's problematic sometimes, right? Because you anticipate certain bandwidth. But the good news about that is you now have touched that many users.
Yeah.
Now, Are you able, sorry, this is digging in because we buy and build resorts, and our resorts have large email databases, and we always try to, serve the client. Were you able to keep those users and move them through a value chain, or do they get stuck in that app? And when you start a new app, you can't use those users?
So, I don't know what kind of resorts you guys have or develop, but it tends to be, and correct me if I'm wrong, a fairly seasonal business, no?
No, actually, we've designed it differently, but it's a business that you came to be at because of a wedding or
Okay.
an event. And I always try to say, sorry for us digging in on this.
Oh, no worries.
You show up because you want to do this one event. We do this incredible pairing with cigars and bourbons and wineries. We have wineries. And we want to make sure you come back later for another event. So we always try to capture you and invite you back again. And I always think of the app world as something like that.
No, for sure. It's comparable. The issue here is that, yes, we would kind of repurpose a lot of these users. And a lot of it was really the content and media production, right? So obviously when you have a World Cup, it's huge because everyone's tuning in, right? When you have qualifiers, it's huge. So we try to do kind of off-screen events that merged with on-screen. However, it was a lot more successful with club football than it is, and by football, soccer. Sorry, right? With club football, soccer, than it was with national teams because national teams are hyper cyclical.
Wow. So everybody's into this VR, this virtual reality. And when it first came out, I had no idea what it was. And I have kids and teenagers and they have these things they wear and they're, I punched into a wall, but there's I went through it, I guess. So are you creating games or what kind of content are you doing for that? Are you doing something with the metaverse, which I don't really even understand that at all either? Maybe you can help us out and understand what you're doing in those spaces.
Makes two of us. I don't really understand them. No, I'm kidding. I do. I mean, look, I think that mixed reality is interesting. So we've been actually working on it, and it was very, very, very unprofitable at first. That segment, it was purely an R&D expense for the past, I don't know, before 2021, it was more of an R&D expense, right? But what we were doing is we were using VR for education technology. So imagine, a pilot simulator of safety training, but with biohab, where you put people into a game, almost a simulated game with the Oculus, with object ripping. So you can teach people, basics, steel welding or safety training, how to, react in a situation where a data center is on fire, for instance, right? Or air marshalling, or even simulated war rooms or simulated crime scenes, even a hostage negotiation, right? Where you have to storm in and, right? So that creates muscle memory. It creates, it's like going out to a shooting range, except in this case, you're conducting all the actions. So we found a great use case for virtual reality there. Now for augmented reality, that's more where I think the metaverse and these layers come in. And that's kind of really Pokemon Go. Think of it that way, where you kind of come in and it's really a gamified social experience, so to speak. So Niantic kind of proved the concept, and we've drawn inspiration from that and incorporated it into quite a few of our, our products. One of our companies is a leader in live events, right? So we do loyalty and rewards programs in live events, and we started minting digital rewards in partnership with organizations like Procter & Gamble, Disney, and it's, taking this metaverse NFT by storm, because it's not really lifestyle brands or some top-down idea of what it should be. Instead, it's a very, very tactical use case. Hopefully
amazing. So here's the question. Let's go back a little bit, right?
Yeah.
Because we're moving fast, really forward. You said you were interested in business young, and you started getting involved in business. I think you said at 15. Is that right?
I mean, I started working around 16, but I didn't really start my first company per se until 21.
So what gave you that? And that's still really young. That's amazing. What gave you that drive? Where does this entrepreneurial spirit come from? And how did you foster that?
Yeah, no, to be fair, my grandfather was a small entrepreneur who post-Spanish Civil War, post-World War II, migrates to Latin America and starts up, a private clinic, small scale. My father was also an entrepreneur. So everyone was it's kind of like like Italy a couple of decades ago, where everyone was kind of a micro entrepreneur per se. So I kind of didn't know anything else, right? That's just the way I saw it. And then in Miami, I had the opportunity to work for a family office and kind of learn the financial dimension of business, and that allowed me to understand scale early on and cost of capital. A few takeaways that allowed me to fail quick and early, and then really kind of hone my craft into a manner where it's been kind of nonstop growth for the past 7 years.
So, you know what? This might be a cool little break session. So
Okay.
we'll run our little fun commercial, but in the middle, we'll come right back and we're going to go dig into venture capital. I love how you said you've been on all three sides. I want you to explain that. And then we'll contrast it to your investments in real estate and the capital you use there and how you think about it differently. And we'll also talk a little more about some of the Series A, Series B work you do and co-investing. We'll be right back.
Cool.
Oh, we are back with Alejandro. Hey, Alejandro, we went into the break talking about, some of the great parts of meeting you at this family office event was you made a cool comment, and I thought it caught my attention from stage where you said, in the world of venture capital, I've been on all three sides. At first, I thought you said two sides, but now you're telling me it's three sides. So why talk about that? Is there two sides?
Yeah. No. But there's three sides, but I think I said two sides at the conference.
Yeah, exactly.
Spot.
So teach us, because a lot of our listeners are very familiar with real estate investing, business acquisition. A lot of our shows do talk about how we acquire other companies, and you crisscross that. You do real estate investing. You do buy companies. You co-invest, and you also do venture capital. Why don't you give us a 101 course on venture capital? Because that doesn't show up on this show enough. Tell us what you think about there and how you got into that.
Yeah, for sure. And full disclosure, I'm not a venture capitalist per se, in the sense that I don't take money from limited partners and then direct that into startups. These are really cash flows from our company, which is profitable. And as a result, we take positions in these companies both through cash and in-kind services, right? So typically we'll invest in a company in 2-year time horizons will be the allocation commitment. Up to $3 million tends to be our sweet spot. And right now we've drastically accelerated that. We have a down market. So, you're getting very good opportunities. So we're very much risk on right now in terms of our private market investing. And really, we're just doubling down on existing companies and taking selective new deals, but on a case-by-case basis, very, very limited, right? So that's kind of what we're doing right now. But the way it all kind of comes together is that we have an opposite approach to what traditional VC looks at. What you're seeing with a lot of, and again, I don't want to make broad generalizations, right? But typically you tend to see a kind of portfolio theory, mutual fund approach, kind of what they call spray and pray, for lack of a better term, where you think that if you diversify through a broad blanket of startups, you will get that asymmetry that will compensate for the failures, right? And you'll get that unicorn or that 100x outlier, so to speak, no? So me, I don't really take that statistical approach. I like to be a difference maker in that I hyper specialize in different areas and find companies where our organization can actually staff them and become difference makers, where they have achieved traction. And really, we need to help get them to scale or market fit. And we help them get to traction and then scale. So we have a very specialized model in that we're both vendors, investors, and entrepreneurs, right? So like going back to the point, we wear three hats and we understand the dynamics of being an entrepreneur, being an investor, and then also being a vendor, right? So what we do here is that we find creative ways to partner with other investors, entrepreneurs, right? And as a result, we approach this more operationally than most financial investors would, right? So we're down in the trenches with a lot of these founders, with a lot of these executive committees, with a lot of these operating teams, right? And we approach and we sit on a lot of boards. So we'll go to board meetings, not really looking to keep, and again, I don't want to make generalizations, but it's not really a situation where we're keeping tabs on our investment. Instead, we're finding ways to address short, medium, and long-term challenges head on and really support the entrepreneurs that we partner with.
Yeah, I think I understand it. And to put it in a more basic sense, when you say you're the vendor, do you mean you have programmers? You have a company full of programmers and you defray them? you use them as a spoken hub model, right? They're able to help in each of your different platform companies.
Yeah, we have engineers, we have designers, we have project managers. Now we've actually acquired a boutique capital advisory firm that we're adding an investment banking capabilities to. So we have an in-house finance team that can help them navigate that journey. It's all very new. We have our venture fund. Well, I guess it's a family office. We operate it like a venture fund, but it's really just our cash flows, right? It's really just Shokworks that invests in there.
Alejandro, so I know you've bought plenty of businesses, and I'm seeing that you've over 7x'd on 2 exits, 7.5x on 2 exits of the businesses. Can you walk us through what that looked like on those 2 businesses, how you bought it, how you creatively scaled those companies, and then how you exited?
Yeah, for sure. One, I was 23 at the time, and that was a mobile payments company where, we were doing QR codes before COVID and before that was a thing. We could have sold it for a lot more. But again, that was another model where I was also not just the money guy, but I was also operationally involved with the right teams. And that facilitated the journey that later ensued. However, now we've been, I could probably say on paper, the return profile has been ridiculous. We just aren't taking chips off the table just yet.
Alejandro, one of the nice things is grabbing you on the show here today. While we watch your journey, first of all, I'm picking up an interesting commonality between you and I. I remember being a hustling, hardworking person, but then I joined a family office to support them. And it actually changed my perspective on how capital gets allocated. Is that part of your journey, or is the family office you worked for connected to your family? Or did you work for them as an administrator and executive?
Yeah, no, I was 16 at the time, so not really an executive role, but it was a family office, a Spanish family office through a friend. But I got some very valuable experience. I was also very helpful to them at a very early age. So, I got some very positive experiences. And I also learned kind of what not to do in many cases. They were active in real estate right in '08. So, I'm not going to say any names, but they kind of experienced a lot of negative things. And I kind of learned that debt is a bit of a double-edged sword. I learned that not all capital is created equally, and timing markets is kind of an exercise in folly. So
wait. Those are such good lessons. Could you break them down for our listeners? Because not every listener knows about venture capital, but every listener needs to hear that not all capital is created the same way. Can you share what you meant by that? Because that's really powerful.
Yeah, for sure. For sure. It all depends on how senior you are in the cap table and what, the stipulations are when you get a term sheet, right? It's not just getting money in. There's a lot of strings attached. And then, a lot of people try to time markets and over lever. You see it a lot in real estate, and there I learned it through real estate. And yeah, like '08 happens, and then you kind of get into a situation where you're forced to make rash decisions, right? So I never really wanted to see myself in those positions. And that's where I kind of learned what not to do more than what to do.
Awesome. And Shokworks is involved in blockchain technology. Can you explain what you're doing in that space?
Yeah, for sure. For sure. Actually, we are. It's interesting because this coincides that I think FTX just filed for bankruptcy, right?
Yeah.
So,
I don't know. I don't know enough about that, but I think I just saw that recently. So what happened there? That was an exchange?
Yeah. That was actually a fairly sizable exchange. So it was, it might have been the second largest, but don't quote me on that. Obviously took off quickly, but, proof of reserves wasn't really a standard practice, right? So you had unregulated exchanges or very modestly regulated exchanges sprouting that made a lot of claims and took on a lot of risk without necessarily being held accountable during the process, right? Didn't really have an independent board of directors. So it didn't go through the same standard of scrutiny. And now you're seeing all the dominoes fall, right? So what you see is maybe crypto, meaning a lot of the coins or digital assets that are not really supported by underlying assets, right? You see them oscillating in price, and you see a lot of these unicorns just come tumbling down and a lot of blood in the market. However, you do see the curve of adoption of blockchain products, right? Whatever they may be, NFTs, and it doesn't have to be the usual suspects, just growing in popularity and scope. So the industry, ironically, is growing. It's really the crypto markets, the over-financialized crypto markets that are going through a very sharp state of controlled demolition, so that's where, but back to the original point, we see as the blockchain as a means to an end, not an end itself. It's a way to make, it's like the internet, right? It's a way to generate value, right? No one really cared about HTTP protocols in 1998, right? They cared about Gmail, they cared about Spotify, they cared about Facebook, right? Microsoft and so on. So it's a thing with the blockchain. Once you find concrete use cases, both for business applications or consumer applications, that's where the value gets unlocked. And that's what we strictly focus on. We don't really speculate or go long any coin. Yeah. We're more about generating solutions, and it's more the technology than, the whatever the coin may be, where we're not interested in that. Does that make sense?
It does. It does. And thank you for explaining it so well. What do you see the vision, the next steps for Shokworks?
Yeah. So the next step, it actually ties into your original question. It's basically, one, disrupting venture capital by providing a more hands-on approach that involves skin in the game, as opposed to really just allocating, being a middleman, and this is going to be very unpopular, but just a middleman between, LPs and startups, right? Here, it's actually creating platforms that unlock value and become, it's not an issue where you're kind of taking a portfolio approach to your companies, but rather having them complement each other and build a proper ecosystem. The idea is to build an ecosystem and kind of transform that side of the business. The other side is really unlocking the potential of the blockchain. So one example is real estate and how tokenization can really help unlock the value, right? Bring liquidity, bring transparency, and add new entrants into that market. We want to do that for stable coins. So we want to do that for hard assets that do have underlying value. We don't really care again about the paper coins. Or
so you this is probably the key thing, if you could just explain, but you'll have to kind of break it down a little easier. For even me, I've heard a lot of rumblings about real estate tokenization and the blockchain being used as a proof of ownership and all that. I believe that's part of the story. But the parts that I get confused about are, and you also just made it an expression that we've not used before, where you said the coin is a real coin or something like that. I think if you could explain all the distinction and what you believe to be the future of real estate tokenization.
Yeah, for sure. And that's like a pretty heavy question. It's kind of a deep thought to unpack, because it's kind of the future of the capital markets, so to speak, right? In terms of, because you already have crowdfunding in real estate, right? I'm sure you guys have probably participated in some campaigns maybe, or at least know a fair bit about it, right?
Yes.
The Jobs Act, Reg A, Reg D, all that, no? So here what you're doing is making it even more mainstream, right? The idea is to create gains in efficiency and security, right? So now it's not all the moving layers of having to contract with a title company, all the middle people that kind of add costs, transaction costs, to just a very simple exchange, right? That's where tokenization could unlock some value. So it could, if you're a syndicator, it could, let's just say if we were to syndicate the equity tokenized, right? The token, the equity portion of private real estate syndicates, so to speak, right? And you can actually expand that to the crowds, right? So you provide access to that investment to, people that aren't accredited investors, obviously with the appropriate regulatory exceptions in the US. And at the same time, you add new pools of liquidity for the developers or whomever the principals are in that deal.
Well, and that is true. That's the part you said. How do you make that legal with the SEC Reg D? That part does confuse me, because if the idea is that I could buy a $10,000 piece of a large piece of real estate, isn't that like, you get my point? You understand my confusion?
I mean, you have to go with a Reg A exemption as well.
Reg A.
I'm not an attorney, so don't quote me on that. But what it does is it facilitates the vehicle or the technology to unlock the potential of crowdfunding.
I get it.
That's awesome.
So use a different regulation, Reg A, for those of us listening.
In the U.S., important caveat.
Good point.
Yeah.
And is it different in international rules?
Yeah. So international investors aren't subject to the Securities Act, therefore investor accreditation requirements, right? So, a lot of our markets are abroad, and anyone can invest without because it's a very bizarre concept to think that because you have money, whether it be inherited wealth or however you obtain that wealth, it somehow denotes sophistication or, you know what I mean? It's supposed to be a consumer protection, but let's just say you're a PhD in molecular biology and, and the other person inherits money. Does that make the other person who inherited money more qualified in a biotech private investment? Probably not, right? But that's the law.
Wow. And Alejandro, where so I know you're also investing in real estate. What space in that platform are you investing?
Yeah, no, good point. We're investing in, single and multifamily opportunities in the Midwest, Indianapolis,
Wow.
Indiana, Ohio, kind of underpriced markets, but we're looking to pilot co-living tactics there. So it's prop tech, right? We're buying our own real estate and we're also onboarding real estate from third parties, right? And we're piloting co-living strategies in order to increase the cap rate and then tokenization, right? For vacation properties abroad. So we have a vineyard in Argentina. We have villas in the DR, and we should be getting a very exciting new property announced in the coming weeks.
Great. And what is the co-living? What does that look like?
Good question. We think it'll be successful, but the jury's still out. No, what we think is we're addressing the cost of living crisis.
Yes.
So you have, nurse practitioners, students, basically adults who can no longer afford living in metropolitan locations in the United States or Western Europe. Co-living standards benefits them in that they pay less and the owner can charge per unit as opposed to rental. So it drastically increases the value of the property, of the rental income.
Yeah, there's a whole story in that. So
That's like New York City.
yeah, we almost have to dig in, and I want to talk to you more about how does, how our resort platform, we have multiple, how does it overlap with your business? So why don't we do a deal? We have a joke sometimes, John, we call it the deal real dive. Like if we were sitting here at the table, Alejandro, this is our last few moments together, and I told you we have hotels, how could I get involved in your platform? How, pretend like this was a sales call. Would you have to buy these from me, or could we co-invest together and use your platform?
That's a great question. So, look, if you have hotels, and I think you alluded to the fact that these are event venues, that there are multiple revenue streams, right?
They are.
Is that
very, very, very robust revenue.
More than a passive investment, it's almost like an operating company.
Correct.
Okay. So to that end, if you want to, for instance, create a membership around those hotels and you want to create a community whereby you mint NFTs and it gives you limited occupancy, a piece of the cap rate, you want to raise money for whatever initiative you want to pursue, maybe to actually create a members club at scale with your 20 properties or more, right? Then that's where you would kind of come to us and we could mint these NFTs for you and, again, have them trade and build out this concept. Does that make sense?
Barely makes sense, but it sounds so cool.
Sounds cool.
Very cool. I'm being honest with you because this is not how we tend to think, but it's here for the common person. It's basically the ultra and modern version of timeshare is what I'm hearing you say. Yeah.
Fractional ownership in this case.
In fractional ownership.
Yeah, because there is a time. So occupancy rights are kind of a non-financial perk, but you would participate in the upside. If you want to have, offer a couple of units to the members, right? And they want to participate in the limited financial upside. You want to raise some money. And you also want to create a community of members where it's almost like a Soho Beach Club, right? So
that is actually part of our business plan. So we'll have to kind of understand this. Maybe you and I do need to have a call, and I'll send you some pictures of how gorgeous these places are. You'll be like shocked. Outside of New York, we're in New Jersey, outside New York, and we're outside of DC. So we're in these great metropolitan regional drive-tos. Anyway, that's enough about the business. Why don't we go back to Shokworks? And as we're signing off here, Alejandro, how can our community get involved with you if there's a way to do that? And how can we be of service to you? And we appreciate your time.
Yeah, no, absolutely. Just look us up, shokworks.io, no C, just K, SHOK, works.io. Drop us a line. If you want to connect with me, look me up on LinkedIn, and I'm sure there will be bios, right? once it goes live, once it's there, where you can add me on LinkedIn, drop me a line, and hopefully if you have a business that you think can be accelerated, right, from market fit scaled up to a critical threshold, that's where we thrive, and we would love to be partners with you.
Awesome. Alejandro, thank you so much for your time today. You were amazing. We've learned a lot, and we really appreciate you. Cheers.
Thank you guys so much for having me in your podcast.
Damn straight. We just got we got to the end of another great show. And everyone listening right now, you're the family and friends. Thanks for staying till the end.
That was so fun. And hey, hit the like, hit subscribe. We're here to serve you guys. That's why we're doing this show. Josh is not paying me. I'm doing this off of my quote unquote sweat equity because we want to make a difference in your life. And then that ripple effect will continue to touch the world.
Hey, amen, brother. Please check us out on capitalhacking.com, all the social media threads. And yes, I know you've probably already sent this episode to one of your best friends. Thank you. We love you. Just go right into your iPhone, hit the plus symbol. We'll talk to you later. See you next week.
Share.